Welcome to the conversation today. I'm Jennifer Kennedy, PwC's Asset and Wealth Management Tax Leader. I'm here in the studio with my colleague and fellow partner, Brian Rebin, to discuss the top trends affecting the asset management industry. Hi, Brian.
Hi, Jen. Thanks for having me.
Last week, we had a wonderful event in Miami with a number of our clients. And over the course of 3 days, we certainly had a lot of discussions, covered a lot of different topics of interest. A couple of things that I took away is, there continues to be a lot of concern around the slow pace at which the deals market is coming back, but also an increasing amount of concern amongst our tax directors with respect to controversy, not only with the IRS Partnership Audit Initiative, but also globally as well. I'd like to really hear the top 3 or 4 things that you took away from our interactions with our clients last week.
Well, thanks, Jen. And I'm going to start off with the voice of the CEO, because we heard from a CEO of an alternative asset manager, and he mentioned the key theme is liquidity, liquidity, liquidity. And I mentioned that 3 times because it really means 3 different things. The first one is around fundraising. We're seeing a lot of alternative asset managers out in the market right now, fundraising for their flagship funds, co-invest products, and even new product launches. And really the key here is around the tax structuring of those product launches, given the wide array of investors that are coming into the product, especially insurance companies, as well as the retail products, especially into asset classes such as private equity and private credit, which are extremely complex. The second piece is around providing liquidity back to the LPs. As you mentioned, the deals market is slow. So alternative asset managers are having to find alternative ways to return liquidity to their LPs, using things like continuation funds, NAV lending facilities, as well as preferred equity deals. Each of these have their own unique tax consequences as they are structured. The third element is really liquidity around controlling expenses and aligning compensation at the management company level. And what we're seeing is different compensation models, especially in private credit and in private equity, for both deal professionals as well as for the middle and back office.
Brian, thanks so much for your insight. I think you did an excellent job of capturing some of the key themes we heard from our CEO guest last week. And thank you all for joining us today. And we will look forward to seeing you at our Senior Tax Executive Roundtable again next year.